Hey, good morning, everyone. This is Doug Campbell with Right Way Options in your morning market preparation video for August 30th, 2017. Well, my goodness, this month has gone by really fast. And hey, I want everyone to keep in mind we have Labor Day coming up, so that could affect the market as we go forward. I'm going to start today. Notice my charts are a lot different. I don't know what's going on. My TC2000 platform is having trouble this morning, and I think it's something to do with the company itself. I think they've got a server problem. So I'm using my Thinkorswim charts, and they're not as marked up as you can see. So what have we got going on here? Well, the diamonds has had a really nice trend, but let's keep in mind that, we are in a current downtrend. And if we look at the downtrend channel, it looks something like that. This rally back yesterday was a rejection of the low, and that was certainly a strong move. Okay? But let's not lose sight of the fact that we are still below price resistance. We tried really hard to cross up out of there and just didn't quite get it done. So, any bullish candle that's trying to show a reversal, one day does not make a trend. Okay? We need to see follow through. We need to see that push out, that break, that downtrend break, because we could easily have a pop up this morning and just another bearish candle. So be careful not to chase into this, and be careful not to overtrade right here. Wait for the market to prove itself, and it will prove if we just give it time. It's those that chase, that speculate, that think that they all of a sudden just see this as the perfect bottom. I've got to buy up like everything, that gets damaged really badly if the market does reverse. Now, keep in mind, we've got that weekend coming with a holiday. We also have the big employment situation number coming on Friday. It is not abnormal for the market to get very light and choppy. So if we don't get a follow through, a break of these resistance levels that holds, we could still see more downside in this market. So what I want to do, I've got plenty, of nice long positions with really good profits in my account. That doesn't necessarily mean that I'm going to be chasing around new trades today until I start to see some proof. Okay, so be a little careful. Now, I also want to mention I am not in any way, shape, or form trying to suggest this is bearish. Yesterday was a beautiful change to what's been kind of an ugly market. Okay? But it could also be just that volatility kicking up in this direction. This volatility kicking up in this direction when we had the same volatility kicking to the other direction just a while ago. Doesn't mean that's changed anything just yet. Okay, let's take a quick look at the SPY. And I am not efficient with this charting platform, but I used to use it a lot, but I haven't used it for years. Here's our downtrend in the SPY. Nice rejection again of that low. But here again, we have that resistance level right up through here that we have to get through. And the SPY did not get as much love yesterday as the diamonds did. They really pushed hard on the diamonds, trying to inspire a whole bunch of buying. But they didn't get the SPY. It wasn't able to even push up toward that high resistance right there. Okay, it stopped right here. So it didn't get quite as much love. There wasn't quite as much going on here. So follow through again, extremely important. Get us out of this area, break this down channel, and then we'll have something going for us. But there's no reason to overly speculate that yesterday was the game changer. It may not have been. Now let's take a look at IWM. And IWM yesterday ended up with a nice day. Rallied back up to right at, around, or maybe even just a tiny bit above the 200-day moving average. But our patterns here are still not productive. in my opinion, for IWM. IWM is still in trouble where we broke down, rallied back. The 50-day moving average is right through here. Failed, rallied back to price resistance right here. Failed the 200-day moving average, and now we've rallied back to the 200-day. So there's nothing here that is suggesting bullishness yet. This is just a bear market rally in IWM, and could certainly serve as one of the clues whether we're going to reverse that and start going back up, or if this area in here would be where the additional failure could occur to move us back lower. So don't put a lot of hope that candle there is changing everything in this trend, because this has a lot of work to do to get back up there. Now the Qs, I think the Qs could be one of the strongest in the bunch. You know, right now all I see in the diamonds is just a lot of pump. They pump a few companies, move the diamonds. It's only 30 companies, but the encouraging thing here with the Qs for me is the longer term trend, and I could take this trend all the way back quite a ways. And I'd need to get the full picture of this trend. But that longer term trend has held up. Okay, we broke down below it yesterday. We rallied back above it at the end of the day. We also have been holding the 50-day moving average. But once again, let's be very, very focused here and very clear that we have yet to break back above resistance. Okay, and that we are still in a current downtrend. Okay, so unless we can get back through there, unless we show that strength, actual buyers pushing this up right here, we could still have some trouble. Okay, now let's keep in mind that we have a holiday weekend coming up. Okay, we have a Labor Day weekend, and on our earnings calendar today, whoops, I'm on the wrong day. What's going on here? There we go. Gonna move this over. We have ADP report this morning. Okay, ADP. They've really been missing the mark here lately, substantially. So I'm not sure it'll be that big of a number to affect the market, but this GDP number will be important. Right now, GDP consensus is suggesting that we'll see an improvement there, up to about 3%. So that's a big improvement. And EIA, petroleum report, of course, is always very important. If we're going to get some support from our oil friends here and our oil stocks to help support these markets, we need to see those supplies continuing to dwindle. And it's probably too soon to see any effects from the Hurricane Harvey. Maybe in the next reading we'll get some of that could help, sustain oil prices a little bit better. With that, because of my charts are so messed up, I'm probably going to call this a day. Be careful here. Just be watchful. Don't chase. Plan your trades carefully. Make sure we're going to get that follow through before you jump in with both feet. RWO members, we have some really nice profits. We're up about 50%, maybe just a little more than 50% in a trade in X. We're up over 50% in a trade in tech. We're looking really good in our positions. We've got a really great position going in Berkshire B. And all of these things have just been, while we've been chopping, we've been making some nice money. No reason to risk that in a bunch of speculation here and take a whole bunch of losses if we jump in right at resistance. Okay, so be cautious and be careful. Plan your trades accordingly. Okay. Hey everyone, if this is the first time you've seen this information, I apologize. I don't have my normal charts going on here, but if you'd like to receive this information every day, I do put out this every day. It's part of my market preparation. And I also write a morning note that is put on our blog. You can visit our website at www.rightwayoptions. And that blog is actually available for everyone. And I will put that link for the blog in the description of the YouTube video, so you can always access that blog information. Do me a favor, click that subscribe button on YouTube, on Facebook. Please, click that follow me button, and always thumbs up are great, and I'd love to hear your comments as well. Everyone have a great day. I wish you fantastic profits, and I'll talk to you all soon. Take care now.